What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at another one of those EV charging companies. This SPAC is looking at a way that they can really set themselves apart from an industry that's going to have a lot of fierce competition. So let's jump in and take a look at them. Alright guys, so first things first, this video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Before we get started today, subscribe to the channel, hit that bell notification, hit all so you can stay up to date. I post new videos every day. And then also, there's a link down in the description to my Patreon account. Come join me over there. The first 100 subscribers, I'm doing it for just $1. We've had some people jumping in there lately, so it's a less than 100 now. I do want to say thank you guys so much for everybody that has joined the Patreon. You have no idea how much it means to me. Seriously, from the bottom of my heart, it is amazing. So thank you. But when you come over to the Patreon, you'll have access to the private Discord where we can talk stocks. I've got a lot of resources over there, especially if you're a beginning investor. You want to learn some technical analysis, some fundamental analysis. I will be posting some Patreon-only videos over there to kind of bring some more education. And then you'll also get access to 4 different portfolios that I have over there, so you can see exactly what I invest into. And then anytime I buy or sell a stock up to the second I do it, any swing trade entries, any watch list, I do post that over there immediately, so you can see that in real time. So then there's also a Webull link down below. Set up an account, deposit $100, you get some free stocks. I get a free stock, help support the channel. So, but let's jump in. Let's not waste any time. So today we're looking at an EV SPAC. It's called Volta, is the company that's merging with the SPAC. The SPAC is Tortoise Acquisition. I've actually kind of had it on my list to do some research, but I had somebody in the Discord last night bring it to my attention, and I jumped on and took a look at it, and I decided to make a video on it because unlike a lot of these other EV charging companies, they're really taking an approach that's quite a bit different, and they're finding a way to really set themselves apart, which I think is going to be crucial in this crazy competitive market, because as time goes on, it's just going to get more and more brutal, and you've got to be able to really find a way to differentiate yourself. So let's jump in. Like I said, the company is Tortoise Acquisition merging with Volta. The ticker symbol that it's trading under right now is SNPR. So they've got a couple different things that I liked. Let me kind of show you what they're doing, what their core competence is, like what they're doing to set themselves apart. So they're charging stations, obviously, but their big thing is these big charging stations right here with screens on them. So they're targeting advertisers for marketing dollars. Guys, I'm in the marketing industry. I own a web design and marketing business. So we are very, very big on targeted marketing. And so this is hugely incentivizing these big, big companies to advertise with these guys, because they can put their stations in places where people go. So their big thing is like putting them at malls, grocery stores, places like that. And the kind of move over billboard. Engage millions of shoppers at retail and essential business locations seconds before they select a brand. So they're offering 450 million audited impressions, 70 million customers reach, increased purchase intent of 44%, which is crazy. Look at this stuff. This is pretty cool. They can offer, different types of things on these billboards, and then also on their mobile app, when you pull up to charge, to plug in, you've got the app on your phone. It sends you, your receipt and everything for when you're charging your vehicle. They can also put ads on there. Then they've got these these motion sensing ads that when people walk by, it moves. I don't know if you guys have ever seen like Black Mirror or anything, but I actually watched a documentary a little while back in China. I guess they're putting like millions and millions of cameras everywhere, and they're pretty much saying that in the future, the cameras will just do facial recognition within seconds, and then there will be projected, billboards that'll be able to change within fractions of a second to, mimic whoever is walking, whoever is looking at it. They will see ads tailor fitted to them. I'm sure you guys have seen multiple times where you're talking about something that you like or you want to buy, and then an hour later it's on all over your social media. Again, being in the marketing industry, I understand that very well, and targeted marketing is something that is getting bigger and bigger and bigger and more expensive, and the cost is going up. And so this is a big thing here. Any place that people can advertise or put ads on, they're going to do it. And there's some cool things in their investor presentation I'll show you. This is cool too. Every time you plug in your car, it'll look at your year, make, and model, and they will adjust the ads that you see based off of that. You know, I could even see like way in the future, you know, people walking around with like contact lenses that like project stuff out in front of them, like on Black Mirror, and it just like ad. But, you know, that's obviously way down the road. So that's for their advertisers. So they've got a revenue generator there where people are going to pay them to put ads on their stations. And then they've also got their site partners, which is like their grocery stores, places like that. They are adding 140 million added spend driven at partner sites. So they're bringing more revenue into these locations. They're averaging a 92-minute dwell time. So people are coming and spending well over an hour at these places to charge their vehicle, and averaging $54 spend per visit. So like the average spend at a gas station is like $8. So, you know, I was kind of thinking about this the other day. When EV gets bigger and bigger and bigger and gas starts to get kind of, you know, transitioned out, what are gas stations going to do? Like, why would you go to a gas station even if they moved all their gas pumps and put EV charging in there? Because when you can, wherever you go, there's going to be charging stations. So that's big. You know, I want to say that in their investor presentation, it said that there's $500 billion in revenue a year up for grabs over the course of 150,000 gas stations, which is pretty dirty. I mean, they're pretty much saying they're going in there and just snatching up gas station revenue, but whatever. And then they've got these custom charging solutions. So they've got fast chargers, the advertising ones, and then the towers. I want to say that they are offering to come and install these machines for free and do all of the maintenance. So their site partners are incentivized to put these in at their location because Volta's doing it for free. And then also, you know, why wouldn't they? Because it's driving more people to their locations. People are spending more time there and, you know, purchasing more items. This fast charger can charge up to 250 to 400 miles per hour. It's got a 55-inch media display. They've got controllable offer, check-in, payment in apps. The first 15 minutes of charging is free as well, so that's pretty cool. But let's kind of take a look at some other stuff. So let's see, where's that one? Okay, so right here, in the California network, their average charging sessions daily is 7 charging sessions daily, an average of 10 hours per use, and then an average charging session length of 140 minutes or 110 minutes. So they're getting more sessions per day, more average daily use, and more and then less sessions per minute or per length because their chargers are faster. And then let's see here. Yeah, Electrify America. Look at this. Volta's California network. Yeah, like I said, 7 times the daily sessions. But this is kind of like the driver experience. So like you pull up, you check in, you plug it in, and you know, you start charging, and then they send you a bill that way, so you just pay right on your phone. Super easy, super convenient. These are the you know, the advertising type machines. 7-time more EV drivers attracted, 3-time longer stays. I wanted to show you this right here. 35% sales increase, which is huge. I mean, guys, like I said, it's incentivizing both parties. And then also, Nissan was the first one to leverage Volta Vision to develop creatives that adapt to vehicles pulling into the station. And then 168% increase in the Leaf awareness, the Nissan Leaf. 75% increase in likelihood to lease or buy the Leaf. And then 2,200 visits to the dealership during the campaign for the Nissan Leaf. Like, it's the Nissan Leaf. You know, it's not like it's a Tesla. So, you know, obviously they're getting results with their advertising, which is big. It's big. You know, they're setting themselves apart, which I like. And then there's some testimonials you can check out. I will link this this presentation down in the description so you can check it out more in depth on your own. But let's look at some revenue. So in 2020, they did 25 million. Looking to jump that up to 47 million in 2021. and then 141 million 2022, 280 million, 492 million, and 826 million. And then it kind of shows you their revenue mix right here: behavior and commerce, charging network, and data and other. Their forecast, they're looking at 100% compounded annual growth rate from now until 2025. So in the next 5 years, they're not going to start breaking even on their EBITDA until 2022. So next year, which isn't too bad. It's not too bad. I want to say ChargePoint and a lot of those other companies are out 2023 and 2024 until they hit break even. Their installation forecast and their growth. So they have 1,507 stations in 2020, 300 or 3,100 in 2020. They're projecting to get that all the way up to 26,000 by 2025. So they've already got some charging stations in there in quite a bit of different states. So they're already out there doing it, which is nice. Now their long-term gross profit and EBITDA forecast, like I said, they're not going to break even until 2022 on their EBITDA. But their gross profit isn't too bad. I mean, it's actually really good, for a company like this. 31%, 40, 47, 48, 49, and 53. Their model is going to kind of compound because the more places that they get their their stations in places, the more ad revenue they're getting, things like that. Then kind of shows, the EBITDA forecast right here. So by 2025, they will be doing about 252 million in EBITDA earnings before interest, tax, depreciation. And then their long-term financial projection summary, like I said, 47 million, 144, 288. Their Volta's average 2021 to 2023 expected gross margin percentage is 10% higher than the median of EV charging competitors. Expected best class growth due to extensive development backlog. And then fully funded business models supported by transaction capital raised and forecasted cash from operations. So they're fully funded, which means they are saying they won't have to do a capital raise. We know how that goes. Sometimes when the stock gets ran up, they do it anyways. But it looks like they're saying that they don't need to, which is really nice. Media-enabled charging model creates nearest EBITDA profitability among public charging peers. Guys, that's the reason why I wanted to do a video on these guys. They're setting themselves apart. They're giving themselves that opportunity for ad revenue, which is huge. That advertising piece is really what's key for me. I don't own this stock yet. I don't own it. I had it on my list to research. I checked out the chart pretty extensively this morning. I think it looks like a good play. I'm obviously going to look more into it, as you guys should as well. But I'm just kind of telling you the stuff I like about it. The other stuff, let's see, that I like as well. Let's kind of come down here. So operational, benchmarking. So their projected revenue growth, 99% up to 2023, 75, 68. You can kind of see the difference between their competitors here. Looks like EVgo is doing pretty well. ChargePoint, I don't like ChargePoint at all. I think they're so overvalued. I think they're going to do well, but I'm just not a fan. Projected gross margin, they're doing really well there, beating out ChargePoint. EVgo is just dominating though. And then their EBITDA margin there looks like they're doing really well, as far as that goes. Energy technology, a little bit different than the EV charging. And then their financial, their valuation benchmark, they're undervalued compared to a lot of these other companies. So, okay, so that's it for that, guys. Like I said, I'll put this down below so you can check that out. Overall, I think it's really cool. I think that advertising piece gives them a great opportunity for added revenue. I think that it incentivizes site partners to go in and get their stations. A couple of things I don't like: that industry is going to be fiercely competitive, and if they do not hit their projections, they're going to get beat down really bad, just like any of the charging companies. And so obviously with any of these companies, you're taking a risk. You're taking a risk that they're going to hit their projections. They're going to do well moving forward. But I like these guys because they're already out there doing it. They've got proven results. They've got, machine learning technology to map out facilities and project how many cars are going to be there, how many hours are going to be charged, things like that. So they can show advertisers, they can show, site partners. So I think they've got a lot of opportunity moving forward. I do like the price clear down here at 11.43. it's a SPAC. Your downside's $10. Look at this big pop, this big gap up it had. I would imagine that was on confirmation of the merger or merger announcement. Again, I just started looking at this company. So yeah, I mean, you are actually getting it at a price point where, it's way down off of its high. It even went way down here and blew past, this point right here. So I think that, in the short term, I think you could get a nice pop if you're patient. It's going to be volatile, just like a lot of the other SPACs we talk about. I'm going to look to take a position. I'm going to start with a small position, obviously, before, until I kind of get enough data that I'm super confident in it. I do like the company. I think they've got a lot of opportunity moving forward. Have no idea what I would put a price target on it right now. I haven't done the numbers yet. I just, jumped on, did some research this morning so I could make the video. But looking at, previous highs, you're looking at, 54% there at the 1765 and 60% all the way up to the 1836 mark. So you've got some nice growth here. You will definitely hit this resistance point right here at the 1376 where it gapped up and gapped back down. But other than that, I think it's looking pretty good. You'll probably run into some more resistance right there. And then obviously it looks like you're hitting some here too. But anyways, guys, again, I like the price where it's at. I think it's a good play. Definitely go out there and check these guys out. I will probably add a position into this coming up. I don't like charge points, so I'm not going to go that way. EVgo is another interesting one that I'll definitely take a look at. But again, I'm in the marketing and advertising industry, so these guys go hand in hand with what I know. And I like to, invest in stuff that I know, and I know that advertising and things like that will set them apart and will give them that competitive advantage that you need in an industry like this. So that's it for today, guys. Wanted to make the video super quick, just kind of jump on, tell you my thoughts, what I think about it. I will have probably a much better, idea of what I'm going to be doing after I really dive in and go through it super in depth, and I will probably make another video on it when I do create the position. But for now, jump on, take a look at them. If you can get in, at these low prices, I think it's a good play. If you're patient, you're willing to hold it. Obviously, once the merger, vote date comes out, they confirm, they merge, you're going to see the stock pop up. So at 11.55, I don't see that there's a lot of downside in it, honestly. And it's looking like it's starting to make its way back up. So it's down today. It is trading down today. But, if there's any questions, put them down in the comments. If there's any other tickers you want me to cover, put that down there as well, and I'll see what I can do to get to it. But other than that, guys, like the video if you get any value out of it. Thank you for stopping by. Thank you for watching it. Come join me at the Patreon. I love you all, and I'll see you guys in the next one. Peace.